Friends, welcome to another episode of Finance and Investing Tidbits. The purpose of this playlist or series is to help you with small nuggets of some insights which can help you in your investing journey. I have personally benefited from these nuggets and I am trying to share them through this series. The purpose of this video is to share how to calculate the net asset value or NAV of investment and holding companies. I have already shared through other videos about these investment and holding companies. I'll briefly touch upon those aspects very quickly, and then of course I'll deal with the net asset value aspect of it. Welcome to this video. Investment and holding companies provide a wonderful opportunities for retail investors, and particularly they are very useful in what I call as defensive investing, where you have a significant margin of safety, and that also helps you in your mind management. I have also created other videos in terms of why I have turned to investing through holding companies. There is a very elaborate video on the same. I have also created video on their comparison with mutual funds, which I am also about to upload. So do have a look at this opportunity. Particularly, I have personally benefited from investing and or investing through investment and holding companies. So do explore that. The purpose of calculating net asset value of an investment and holding company is to check its relative attractiveness of price in comparison with the NAV. You would be astonished if I were to share with you that as of the date of creating the video, there are stocks, and I hold one of them, where the price is just 20%, unbelievable, 20% of the net asset value. This is absolutely unimaginable. Now, this is a great opportunity. So why would I pay exactly the same as NAV in buying a mutual fund unit? I would rather buy an investment and holding company where I'm getting a steep discount. Now, of course, one could argue that the discounts remain, and I have elaborated on those aspects in my other videos. So here I'm not going to get into those. But here I'm only going to focus on the net asset value calculation, because unfortunately many retail investors don't even have a clue of this NAV. And if we are able to calculate the NAV ourselves, even without waiting for the quarterly results, then we can actually find out a great opportunity. And it, as I've said, it also helps us in our own mind management, particularly during this COVID steep fall. Fear did not touch me because a large part of my portfolio was investment and holding companies. And as a result, I knew that the NAV was significantly more, and therefore I never sold like many other panicked retail investors sold at a wrong time. And we have seen how stocks have multiplied after COVID. So you will save yourself from this challenge if you have known the idea of calculating the NAV yourself, because not many of those companies actually declare their NAV. In fact, those are really in minority, those companies which actually declare their NAV on their investor portal. Whereas in mutual funds, every mutual fund is required to declare the NAVs at the end of every day. So we need to calculate these NAVs ourselves. We may not be able to get exact idea, but even if we are able to get 95-97% idea, which is perfectly possible, then it will actually give you a wonderful opportunity. NAV of mutual funds is calculated as the value of their portfolio divided by number of units issued in the scheme. Similar logic needs to be applied to investment and holding companies as well. For this purpose, we need to know their equity portfolio, quantities of shares of their own group and other companies that they have invested in needs to be ascertained. This typically is available in the annual report and their other disclosures. So we are able to put that in an Excel file and then we would be able to estimate the NAV, as I'm going to discuss. We don't have to worry about updating it from day to day. We just need to update it once a year, once the annual report is released, and then hold on to that template for the rest of the year. Again, next year when we get a fresh update through the annual report, we can update it. But that's quite functional from our perspective. Bulk of the portfolio of such companies would consist of listed equity shares. Hence, by multiplying those quantities by their current price, we can get the entire equity portfolio value. So you don't have to do repetitive calculation. You can simply develop an Excel file in which you can populate their quantity and keep on updating the price. I have another video which I have in my equity investing series, where I have even provided an Excel file for you to use. You can explore that. In addition, these companies may also have unlisted shares as a part of their portfolio. They may even have invested in bonds, mutual fund units, whose current prices may not be worthwhile finding out, since they would be relatively smaller portion of their portfolio. So we don't have to get into too much of an effort to really get into that 100% accurate calculation. Even if you get 95%, 97%, that's perfectly fine. For unlisted investments, the valuation as reported in the previous annual report could be simply used for all practical purposes. We don't even have to apply our mind in estimating their current valuation. The company may also have some other non-current assets, including some land, and also it may have a few liabilities. However, in the overall context, the same could be ignored, taking a very practical view of what is material and what is not material, what is important and what is not so important. So you can simply focus on their equity portfolio of listed companies. By dividing the entire portfolio by number of shares that this investment and holding company has issued, one can get a good approximation of NAV. For example, if the entire portfolio is 10,000 crores and the number of shares issued by this investment and holding company are, let us say, 10 crore shares, then by dividing 10,000 crores by 10 crore, we can easily find out the NAV, which would be about 1,000 rupees per share. Now, if the share is trading at 400 rupees, 300 rupees, you can calculate the discount, and you can explore my other video in which I have even given you the Excel template. As I said initially and repeated it earlier, this NAV could then be compared with the prevailing price to check the discount and then take a buying or selling decision. You may even find that this discount keeps on changing. And as the discount shrinks, you benefit from increasing NAV plus increasing the price because of the shrinkage in discount. So you can invest when the discount is too high and think of selling or partly booking profits when the discount shrinks. So that provides a wonderful opportunity. And as I have discussed in one of my other videos, it can also provide you wonderful switch opportunities. I have in fact created that video in the thick of the COVID pandemic, because during this COVID period, there were wonderful switching opportunities to create more value without investing fresh capital. So for more such videos, do explore our channel, Dr. Abhijit Fadnis. Thank you.